Hey, it's Clay, and this will be a video chart on ticker symbol YUMA. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to do this time frame. It does a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. Got to be honest, this one totally caught me off guard. The last time I saw it was before the final 30 minutes, so the chart was looking something like this, and in my mind, it just started to come across like, all right, we got a bull pennant here, and then all of a sudden the final 30 minutes happened, and wow, I'm not going to say it's totally destroyed the chart because that's not quite accurate, because big picture-wise, the price does still have the opportunity to build a higher base. What do I mean? Well, let's just say that the price pulls back here a little bit more, behaves in that manner, and then starts to work its way back upwards. Even at that point in time, now emphasis here on the big picture. I realize that if you bought up there, you don't really care about this, but from the big picture point of view, that would still imply there's a set of lows there, a set of lows right there, and if you envision those as stair steps, you'd still have stair steps going in. So that's why from the big picture point of view, you can't sit there and say that the entire chart's destroyed, but wow, yeah, this was a very brutal session here, and it wiped away a big part of the chart. So the first level of resistance now comes into play is based on a foundational rule in chart in which states when levels of support are broken, and going into the final 30 minutes is an area right down here around 345 or 385 was indeed a level of support. But now that the price is broken down below it, according to technical analysis, when supports are broken, they tend to act as resistance. So if there is any sort of bounce back to the upside, 385 is going to be that first key level that needs to be fought through. And the next key level after that, right up there at 425. So 385, 425, two of the near-term levels of resistance. Taking a step back and then looking at all this all from the support side of things, I talked about those stair steps earlier. And really the easiest way to measure those stair steps and just kind of measure the overall health of the chart is going to be to keep an eye on that purple line right there, the 50-period moving average. As the name implies, that line is going to move itself higher and higher. So from the grand scheme of things, assuming you care about the big picture point of view, as long as the price is above that purple line, then technically speaking, the trend is still in the bull's favor. So again, that is why you can't say the entire chart's ruined, but it does depend on perspective. Once more, if you're some sort of day trader scalper and you bought there or there and your plan was to buy and sell within 20 minutes, well then yeah, you don't care about the 50-period moving average. But if you do have more of a general framework perspective of the chart, then yeah, as long as the price stays above that moving average, that implies the overall trend is still healthy. So let's see how this one continues to play out. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.